Hey guys, what's up and welcome to a new Tesla update video. So today let's go over the market, see what happened and what we can expect for the remainder of the week and potentially going into even next week. So as usual, if you guys enjoy, don't forget to hit that like button. Again, remember, none of what I say in today's video is financial advice. Make your own decisions, do your own research, all that good stuff. You guys know the drill, you guys know what it is, but let's just jump into it. So Tesla ending the day at 100, just shy of actually $181. Fortunately in the red, down just over 1% compared to the QQQ being down almost 0.8%. Tesla actually, I would argue, is giving a very slight outperformance, but pretty much more or less in line as well. So nothing too crazy at all, but you know, maybe ever so slight outperformance, but again, more or less in line with the actual market. Now, what does this mean? What can we expect? Is this good? Is this bad? You know, are we still bullish? Is it now bearish? What's the deal here, right? So again, this is where it's overall confusing, mainly because Tesla to me still looks pretty good. Still looks fine. Nothing. I don't see anything that I'm personally worried about at all. However, the same cannot be said about the indices, the QQQ, for instance, right? As you can see, we did fall out of this overall kind of, I don't know, wedge, I guess, if you will, the pennant that we were in. Fell to the downside. You can see this massive red candle. And the thing that makes it worse is the fact that we are potentially setting up a bear flag right within this area, which isn't going to be good. Or you can argue like this, something like this, maybe, I don't know, right? But like the point is, it seems like this is a bear flag. Now, again, just because it's a bear flag, it doesn't mean it has to play out as a bear flag into the downside. It absolutely can play out to the top side, 100%. Well, not 100%, but it can. The point is this is more favorable for the bears than the bulls, right? But again, it doesn't mean it has to be or has to play out that way. So the thing that makes me a little worried is the fact that the indices do look a little bit, you know, at least the QQQ looks a little bit weak. At least SPY, you know, still overall within this major channel, which is a good thing that I like to see. But moving over to Tesla itself, right? Tesla, again, not looking that bad. You can also notice the VIX is red on a red day. You guys know what that usually means. Again, just food for thought. Usually a bit of a bear trap potentially, but we'll see if that actually ends up being the case or not. Now, taking a look at the way Tesla actually performed, right? So you can see essentially today we came up and then we pretty much got rejected back at the exact same line again. Like I said, you know, the resistance of the line kind of goes lower as the days progress, as you can see, right? We came up all the way to this kind of 188, got rejected. That was the resistance. Today we came up to like 186, got rejected. That was the resistance of the line and everything, right? So that's kind of the idea there, right? We're still having issues actually breaking out of the final like major downward resistance, or you know, of the channel that we are still technically in. Broke out of the, you know, the mediocre one, but now we're at the final boss, if you will, of you know, this downward channel that we are in, which again this usually resolves into a bullish in a bullish way, right? Usually resolves to the upside once we do break out. Doesn't have to, but usually these kind of things resolve to the upside and you break out to the north or northeast, I guess. And that's usually a good sign, right? So we're still pretty much waiting for that to happen, right? That's kind of the main thing that we're still looking and waiting for to happen. So until we can see that, you know, obviously I'm not insanely bullish. However, I am more bullish than bearish, mainly because, again, I do expect it to actually happen. Again, doesn't have to, but I definitely think the odds are in favor of us breaking to the north side of this resistance and moving up to the northeast side of this chart, at least for the, you know, short term ish, if you will. Now, another thing to keep in mind or pay attention to is the fact that we did drop all the way down to the kind of 180, 179 ish level, which is fine. We did that before and we got, you know, and we came right back up, right? So this is overall pretty decent area to come back down to, kind of build up that support, build up the momentum, if you will, before we actually start making our next move, right? We're essentially consolidating after this massive run, which it was a pretty massive run. We essentially went from all the way here to all the way here, almost like a 13 to 14% run, and really not much, you know, that many days really, right? It took what, from one, including the day that we actually started, 1 to 4 days of trading, and we pretty much went up like 13-14%, right? Which is a fair amount. So naturally we are consolidating in this little area now, kind of, you know, rebuilding the momentum, kind of refueling, if you will, right? Another thing to keep in mind to kind of, you know, assess whether or not the situation that we are currently in and, you know, the place that we are kind of I just like lost the word entirely in my head. Essentially going sideways, right? Consolidating is the word. Where we are consolidating, is this an okay place to consolidate? Have we broken any important levels? No, we haven't. And one way to consider this is the fact that you go to this, right, Fibonacci, all the way to the bottom, which is the swing low, go up here, which clearly has been the swing high so far, roughly, right? And you can see we are essentially bouncing right off the 0.382, which is actually a pretty good spot to bounce off if this momentum is still intact, right? You can go as low as the 0.5 in my opinion, and it's still fine. But honestly, if we can hold this 0.382, which is around the 180-ish level, and kind of maintain and hold that 180 level and above this 0.382 Fibonacci level, that's a good sign. That to me tells me that the momentum for the bulls from this initial move that was about 13 to 14%, in a few days, is still seemingly intact, which is a good sign. So I'm personally seeing if this continues to hold, I expect it to. I did sell a put. I bought back my old one and I resold it again. But essentially, I'm expecting it to hold, and I'm expecting it to rally up and break out, and Tesla maybe to even honestly do its own thing aside from the market and not really follow the market necessarily. So, in line, I guess, if that makes any sense, right? But that's essentially what I'm seeing as of right now, ladies and gentlemen, at this very moment. Now, taking a look on the daily chart once again, we'll take a look at the major moving averages and whatnot that we want to see and care about, right? So opening this up, you can see 21 EMA still above us. So once we do break out, this might slap us back down to overall retest this line, same way that we did here. We went up, retested, and then we went up again, more or less. Right now, we're kind of consolidating. Same thing might happen here potentially. We'll see, of course, where we can potentially come up to the 21 EMA, get slapped back down, come back, retest, and then rally. That is a possibility as well. On top of that, we have the Bollinger Band, which is essentially, where the 21 EMA is, which is perfectly fine. It is starting to curl in together, so it feels like it is going to start potentially consolidating within this area. And I personally think we'll probably be trading within this kind of low 200s to the very high 100s area for maybe a decent amount of time, honestly, before we potentially break out, hopefully to the north side, right? But we'll see, of course, as it happens. Then we have the 15 to 200 that are so well above us that we don't care at the very moment. The 50 is sitting at, actually, the 50 we'll talk about. Actually, the 50 is potentially important because I don't think we'll get to the 200. The 50 is sitting around 221, right? So that is a level that I'm personally I will not be surprised if ultimately we come up to the 250 or to the 50 moving average and potentially test that one more time once we, of course, break out of this actual overall downward channel that we are currently in, which is like a bullish pennant. Which would be a very, very good thing to see, right? Going all the way from here to here. I mean, if in theory that were to happen, of course, naturally, the longer it takes, the more this is going to move down. But let's just give it, let's just pretend it'll move down to around 216, let's say, by the time that happens. That's still about a 20% move from where we are today, which is a pretty fair amount, right? So that is definitely a possibility, right? And then the final thing is, of course, the 5 and the 10-day moving average, which we are still kind of trading in between, still above one of them, below the other, right? Above the 5, below the 10. Not too meaningful, in my opinion, as of right now, that we're slightly below the 10. We're pretty much right at it, right? So again, I'm personally definitely more bullish and bearish in this specific instance, in this specific scenario that we currently find ourselves in. Maybe I'm biased, maybe I'm not entirely sure, but I'm not feeling too worried just yet. Now, again, the key levels you want to be paying attention to for the bulls, right? You want to be breaking out of this channel, which again, the longer it takes, the lower the resistance will be. So in this case, the resistance pretty much around tomorrow will be like the 183-ish, 184, something like that. We want to break those levels and start getting above that, right? However, if you're a bear, what you really want to see, in all honesty, to really start considering a potential bear case once again, because at the moment, the bear cases don't look very good. However, to reinstate that bear thesis, in my opinion, what you would want to see to start things off and to even start thinking about that is a break under about 176, 177, something like that. If we start breaking under there, not looking so hot, and especially if we start breaking below this gap fill, which, in theory, let's say we get to this, and if we start, not bouncing off this gap fill, that's like another check mark for the bear thesis to get even stronger. And of course, the biggest one, of course, is losing the overall current low that we have, which is around this kind of 166-ish level, right? But I personally don't see that happening, again, mainly because of the things I just mentioned. On top of that, of course, on the daily, you can see we still have this beautiful bullish divergence. On the 4-hour, you can see it's even more obvious. The 3-hour, even more obvious, as the stock is still technically on this downward channel over here, still technically making lower lows and lower highs. In theory, we are still overall making higher highs and higher lows on the RSI, right? So, ultimately not looking all that bad still. The 1-hour looking still pretty decent as well, still setting up bullish divergences. It's looking good, man. It's looking good. The short term is the only thing that's still kind of a little bit unpredictable, and as to like, will it happen tomorrow? Will it happen in 3 days, right? Whatever. But the point is this slightly longer time frames, the 1 hour to the daily, are all showing a bullish divergence, which tells me that whether it takes a day, whether it takes 3 days, maybe even up to a week even, right? It does seem like, as of right now, again, as it stands today, that we are going to be breaking to the top, to the north and out of this channel, and potentially revisiting the 200s, maybe even the 220 plus, right? So That's kind of what I'm expecting. That's what I'm seeing. And that is my current prediction, right? So let me know what you guys think down below. If you enjoyed this video, don't forget to hit that like button. On top of that, guys, don't forget we are still potentially setting up the inverted head and shoulders here, right? That right there. And then on top of that, we might be setting up an overall major inverted head and shoulders like this that I did talk about previously, which also is a possibility. So keep that in mind, guys. Just things to consider. But again, that's just kind of a very far out prediction. Doesn't have to play out. Just something, just kind of like a food for thought. But yeah, that's it for the video. Let me know what you think down below. I'll see you tomorrow. Peace.